Inflation is quietly making some people very wealthy right now. And the wild part is, most landlords have no idea they're sitting on one of the greatest inflation hedges ever invented. We need to talk about why owning rental property during inflationary periods isn't just survivable, it's arguably the ideal position to be in. Think of inflation like a rising tide, except instead of lifting all boats equally, it specifically turbocharges the value of hard assets while slowly drowning people holding cash. You, as a landlord, own a hard asset, and that changes everything about how this game is played. Here's the beautifully ironic part. The same inflation making groceries and gas unbearable for everyone else is simultaneously pushing your property value higher and justifying rent increases across the board. While your tenants feel the squeeze, your asset appreciates and your income grows. That's not cruel, that's just how the math works. Now let's talk about the single greatest weapon in a landlord's arsenal during inflationary times, the fixed rate mortgage. You locked in, say, a 4% rate years ago, and now inflation is running hot, meaning you're essentially repaying that debt with dollars that are worth less than the ones you borrowed. The bank is quietly losing that fight and you're winning it. The historical pattern here is almost boringly predictable once you see it. Real estate has outpaced inflation in roughly 8 of the last 10 inflationary cycles, going back to the 1970s. Every cycle feels different. Every headline screams uncertainty, but the underlying mechanic, scarce land, rising construction costs, growing population, keeps reasserting itself like clockwork. A common misconception is that rising interest rates, which typically follow inflation, will crush landlords. And look, that fear is valid for buyers, but you're not buying right now, you're holding. Rising rates actually reduce housing supply by pricing out new buyers, which pushes more people into the rental market and directly into your units. Let's talk rent increases, because this is where landlords either leave money on the table or play the game intelligently. You don't need to spike rents overnight and risk turnover. A measured, consistent annual increase of 3 to 5% tied to inflation indices keeps you competitive, legal in most markets, and compounding beautifully over time. Operating expenses will rise too: maintenance, insurance, property taxes, and you'd be naive to ignore that pressure on your margins. The disciplined move is auditing your expense structure annually, shopping insurance providers, and building a reserve fund so inflation-driven repair costs don't ambush your cash flow. Here's where behavioral finance becomes your edge. Most amateur landlords react emotionally, either freezing rents out of guilt or overcorrecting with aggressive hikes that spike vacancy. You want to be the landlord running a process, data-driven, unemotional, consistent, because that discipline compounds just like interest does. Position size matters here too, and this is the part nobody talks about at the dinner table. One over-leveraged property in the wrong market can wipe out the gains from 3 well-positioned ones. So the lesson isn't buy everything, it's buy deliberately, size conservatively, and let time do the heavy lifting. The community of serious real estate investors has a saying that sounds almost too simple. Inflation is your silent business partner. And unlike most partners, it never asks for equity. That reframe, from viewing inflation as a threat to treating it as a co-investor, is genuinely the mental shift that separates reactive landlords from strategic ones. There's even a philosophical layer worth sitting with here. You don't need to predict when inflation peaks or when the Fed pivots or what rent growth looks like in 2027. You need a sound property, a fixed obligation, a disciplined rent strategy, and the patience to let the macro environment work in your favor. That's it. Discipline, sizing, and consistency will always outlast conviction and timing. The landlord who has owned 3 modest rentals for 15 years and raised rents methodically has almost certainly outperformed the speculator who tried to flip in the perfect window and missed. Comfort with any outcome comes from knowing your process is solid, your reserves are funded, and your debt is fixed, because then inflation becomes tailwind, not turbulence. Whether you're just getting started or ready to scale your portfolio, check out the links in the description below. We can connect you with real estate investing resources, trusted home contractors, and qualified lenders who understand exactly the strategy we just walked through.